Ready to do this?
Ready.
Awesome. Thank you, Sabrina. All right, welcome everybody. It's Finance and Personnel Committee night. It's Monday, July 1st, and it's really 6:15, and we are here live at City Hall. Welcome. Let's do the call to order. Sean McAllister present.
Mike Milkey here.
Dan?
Ian Stevens coming to you live from the interweb.
Welcome, sir. Thank you. Thank you. Item number 2 is consideration and action on the minutes from the previous meeting.
Mr. Chair, I move that we approve the minutes from the previous meeting.
Second.
Motion by Dan, second by Mike to approve the minutes from the previous meeting. Any further discussion on that? See none, all in favor?
Aye.
Aye.
Any opposed? Motion carried. Thank you. Item number 3 is public input, limited to 3 minutes per individual. Second call for any public input. Third and final call. Dan Wick has no public input today. Nope. All right. Thank you. That item is now closed. And item number 4 is the presentation of the 2023 audited financials from Hoskins and Ash. Welcome. Thank you.
Just want to make sure you hit them. You're green, you're golden.
Perfect. Is it good? Okay. So my name is Justin Peterson, Senior Audit Manager for Hawkins Ash CPAs in La Crosse, kind of the audit lead on the overall. So I'm here to, we had sent you guys 4 reports total. For today's purposes, I'm just going to go over the summary financial report. The other reports that you did receive, the big one, 80 pages would be the financial statement, full financial statement disclosure. Everything's included on here. You'll also have received the federal and state single audit report. And then the last one, the management letter, independent auditors report and communications with those charged with governance. I'll cover kind of what was in those reports in this short and summarized report. So starting kind of with the report, first report that's in this summary report. So we were on site for the audit the week of March 18th, and then reports were issued on June 20th, 2024. And then as of today, all required reporting is completed for the 2023 audit. So there's the Form C due to the Wisconsin DOR, TIF annual reports, PSC, and then the federal single audit's been submitted to the federal government. This independent auditors report states that we expressed an unmodified or clean opinion on the audited financial statements, the full report that we have. And then it also states that this is just a summarized report, doesn't have the full disclosures. Going forward to the combined balance sheet. So the combined balance sheet, this is combining all funds together into a single column, kind of giving you a quick look at what the balance sheet looked like as of 12/31. A couple things of note, if you look down at the bottom, equity or fund balance, it breaks up, kind of compares between last year and this year, where some of your total fund balances went from. A couple items of note, your major enterprise fund balances went up $600,000. General fund balance went up $839,000. And then the other fund balances, which comprises of a bunch of all your other funds, was up 1.7. That'll be shown later in the report. The next page is a graph showing the last 4 years and where your fund balances have gone. The green column will show the general fund, and the blue column shows all the other miscellaneous funds. As you can see, the general fund is since 2020 gone from $9.9 million to now just shy of 11. And then as well with the other funds, those have also increased over the last 4 years. Going forward to page 4. Page 4 shows the general fund revenue as compared to the budget and also the 2022 actual numbers. As you see at the bottom of the page, the actual numbers for 2023 were $1.6 million above budget. Big items to note there, the permits and inspection fees were up $550,000 from last year. And then the really large increase was the interest revenue, which was up $610,000, which caused that huge difference between what was budgeted and what's the actual. Similar to that, the changes from 22 to 23, similar reasons. There is one thing that kind of pops up there is an unbudgeted item. So there was a new accounting or government auditing standard that was put into play, and that's for the CIBITA proceeds at the bottom. So what that is any kind of subscription-based technology arrangements, it kind of gets recorded as a lease on your financial statement. So you'll see that 215 both on the revenue and on the expenses. Those kind of offset. The graph to the right of this shows basically where all of your revenue in the general fund comes from. Obviously, a big portion of that revenue is coming from taxes and special assessments. And then down from that, your intergovernmental funding, charges for services, license permits, and then the miscellaneous. Miscellaneous, again, is a lot larger this year because of those proceeds and then also the interest in the current year. In the past year, that was closer to like 2 or 3%. Going forward to the expenditures, very similar to the revenues. This is a comparison between the budget and then again, 2022. Looking down at the bottom, you can see that the actual was above the budgeted numbers. Main reason for that was those CIBITA capital outlay that I had talked about on the last page, and then also the $700,000 transfer that was made at year end to the equipment replacement fund. And then again, the graph to the right breaks down where your overall expenditures for the general fund are going from. Big portion is fire and police, obviously with the public safety, then general government, public works, culture rec. This is pretty comparable to where you guys have been over the last couple of years with the breakdown. Page 6, this is showing the statement of revenue, expenses, and changes in net position for the water, sewer, and storm, kind of your major enterprise funds. Couple items of note here. The chart also shows it on the right. As you can see, back in 2020, where the operating income, operating loss was, they were all kind of hanging around zero. Some of them were negative. That's when some of the rate cases went into play. As you can see, water's kind of kept a steady amount above as an operating income. Sewer has joined or gained since 2022, 2023. And then the deficit in storm has decreased over the last 3 years, where it was at 375,000 in 2021 and now down to 43,000 in 2023. Page 7, this is where we're covering all of the other funds. That was that other fund number that was on the very first statement of net position. Couple items of note here, the 2023 capital project, obviously there was the bond issuance for that. That's the major increase in the fund balance this year. There's still 1.3 million left of the budget. One of the big decreases is the previous year capital projects. As those capital projects are completed, those funds are used, and that caused a decrease of 700,000 in the other capital projects. Not really much changed in any of the other funds. Tourism did have an increase in the room tax in the current year. That caused the slight increase in that fund balance, but otherwise most of the fund balances were pretty comparable. Page 8 kind of goes through the different reports that were in those 3 other reports we showed. First one, independent auditors report. As I said earlier, it's an unmodified or clean opinion. In our opinion, the financial statements are presented fairly, free of material in all material respects. The next paragraph is the independent auditors report. This is the report that we issue on the single audit, both state and federal. Again, unmodified, clean opinion. There were no compliance or control issues noted in the single audit. Overall, the city for general capital assets added $3 million in general capital assets. A big portion of that, 1.4 million, are ongoing projects. 1 million was in machine and equipment purchases, 396,000 in improvements, 81,000 for building, 81,000 for infrastructure. And then the water, sewer and storm utilities added a total of $1.5 million in fixed assets. 271,000 were made up of contributions from private developers. Next, the long-term debt. So there's a state statute that limits the amount of general obligation bonds that a municipality can have. Your total for 2023 was $146 million. The city's general obligation debt as of 12/31 was 42 million, so well below that state statute limit. The next report that was in the full financial statements was the auditor's report on compliance and internal control over financial reporting. Again, no findings, no issues noted with that. And then the management letter or communications with those charged with governance. This report discusses the timing and the scope of the engagement. This is where we would also put if we had any disagreements with management, any problems occurred during the audit, there were no problems. So everything was good with that as well. Did you guys have any questions?
That was a great presentation. Thank you for that. Well, let's see if my colleagues have some questions.
I guess I'm just wondering, so the interest rate, I know you said normally it's about 2% of our general fund proceeds are from that normally. It was up 610,000. Is that something that we are looking for again this next year? Or do we not know? Is that more Sabrina?
That's more me. So in 2023, prior to you coming on, we did decide to invest our money in Dana Investments. So we took our reserve balances that were just sitting in savings accounts, getting next to no interest, and we moved them into Dana Investments. And now we're seeing much more interest returns on that. So that's the main reason for
Got
the
it.
increase.
Well, great work.
So if I could, this is probably a Sabrina question. The trends on the stormwater shortfall is improving, but I'm concerned that it's consistently in the negative. Is that something we need? Was that a one-time thing in 2021 where we had that flash flood over on by Monroe, or was there a big expense leading to this, or are we just running at a deficit operationally?
I believe, I don't want to speak for Jared because he's not here, but I believe in 2020 and in 2021, the auditors kind of came to Jared and said that we needed to increase the fund balance in the storm water. So we've slowly been increasing the ERU rate. So that's why you see it kind of coming back.
All right, and we're close to par, but do we anticipate getting to a basic break-even point in the next year?
Yes.
two?
Yes.
Okay, thank you.
Diane or Larry, do you have anything at all? Yep,
If you could approve the financials, that would be great.
absolutely.
I'll make a motion that we approve and place on file the 2023 audited financials presented to us from Hawkins Ash CPAs LLP.
Second.
Motion by Dan and second by Mike to accept and approve the presentation of the 2023 audited financials from Hawkins Ash. Any further discussion? Seeing none, all in favor?
Aye.
Any opposed? Motion carried. Thank you very much for your time. We appreciate it.
Thank you.
Item number 5, discussion on unassigned general fund balance policy.
I will take that. So it was asked during the close of year end for 2023 that our fund balance policy be revisited at some point. I decided I've been holding off on this just because waiting until we see like where we ended in 2023 with the financial statement audit. So that's why I'm bringing it back to you today. On page 14 of your packets, it does state what our unassigned general fund balance policy is. It states that we should, to maintain the city of Onalaska's credit rating and meet seasonal cash flow shortfalls, the budget shall provide for anticipated unassigned general fund balance between 25 and 40% of annual general fund revenues. So the first thing I'd like to say is that the city does have the strong bond rating. We don't spend beyond our means, we don't borrow beyond our means, and we have a low mill rate. The city is above that policy of the 25 to 40%, which is not a bad thing. It is actually a good thing. It's part of the reason why we do get that good bond rating. They always note that in our yearly bond rating, our credit rating from Moody's. I did go back to 2014 and we've been ahead of that 25 to 40%. So bringing this forward, if there is intent that we would change this policy, I would recommend that we would change the wording to say that the unassigned general fund balance be at minimum 45% of annual general fund revenues. If there's inklings of changing that, that would be my recommendation. I did talk this over with our auditors as well. Again, we have strong reserves. It's a good thing. But if there's intent to change that, that would be my recommendation.
Questions or feedback, Dan?
So, I mean, it strikes me that 40% is a pretty conservative reserve. If we change the terminology, like what happens if there's a catastrophe and we need to go below 40%? Are we creating barriers for ourselves if we want to be flexible in the future?
I'm fine with keeping the policy the way that it is. It was just brought forward that we have a discussion on our policy. So that's why I'm bringing it forward to you today. I can tell you that our percentage at the end of this year was at 90%. So we are sitting in a very strong position. I would be pretty worried if we got below 40% where we're currently at.
And if I can
And
add,
then I'm sorry, the excess funds, these are employed, are these through Dana Investments?
That is currently, yes, we have 9 million sitting at Dana Investments. So if we want to change the policy at all, that would be my only recommendation, but I'm fine with keeping the policy where it's at as well.
and I'll just jump in as well too. And Sabrina and I did have some conversation about this and what would make sense. In response to the question about the policy, Alder Stevens, as we've demonstrated in other areas, any policy that we have, the council can always either change the policy, temporarily suspend the policy, or whatever the case might be. So if we did, for whatever reason, at some point get down to that number and needed to dip below it, the council can always suspend the policy or change it, whatever the case might be. So that there's that. We are sitting at a very healthy reserve right now, which again is not a bad thing. So keeping some extra in there is not a bad thing. I did reach out to different administrators across the state. They're around the 40-ish, give or take, each direction. It just varied from municipality to municipality. So I do like the idea of the minimum 45%, because when you start getting lower than that, then you got to start looking at what is it that we're doing that we need to maintain something more. Again, we are significantly above that. That is obviously a different question for another day for some further discussion. But I would support as well too, than not to go or them stay at 45% or set it at that. If we kept it the same, would that make a big deal for us? No, it wouldn't. We likely would do things very similar to what we're doing, maybe some tweaks here and there. But that 45-ish% I think is a good place to be at.
You good? Oops, sorry.
No, I was just going to say, I also talked to other finance directors across the state, and they were all around that 40 to 50%. So I feel like we're in that ballpark.
Is kind of the recommendation just to leave this alone then, do you think? Or Diane, you have some feedback too, I'm thinking.
Thank you, Chair. So Sabrina, could you just confirm, I know you had sent out an email to me back in February 15th. You had said at that time we were at 69% of reserves.
If, it depends which calculation you're referring to. So there is a calculation where you would take the unassigned general fund balance and divide it by the total government-wide balance. And if you do that, then we're closer to that 60%.
Okay.
But if you are looking at what our policy states and we compare anticipated our general fund balance to general fund revenues, we are at 89%.
89. Thank you. So
Sorry, 90%.
about 90%.
Sorry.
Okay, thank
We
you.
were at 89 for 22.
Okay, we'll say circa 90%, just to round up. So then when I look at the policy 4.8, right now it does say the 25, between 25 and 40%, and you're suggesting possibly having a minimum 45%. Would you recommend, what would you recommend doing with the following paragraph? Should the unassigned general fund balance fall below 30% of general fund revenues, a plan for regaining compliance with the policy shall be submitted to the city council via the finance committee. Keeping that?
Yes,
Okay.
that's why I didn't include that piece. My apologies, but yes, I would not touch that.
So is this more of a discussion about the actual policy, and maybe the further discussion is later this budget year, as far as if we need dollars, that we may be taking dollars
No.
from, that's a future discussion.
Correct.
Maybe,
Possibly.
possibly. It's not a good idea to use reserves for operating purposes, so I don't think we should ever talk about spending reserves when we're talking about our operating budget. But further conversation in the future, we could talk about it for capital means.
Okay, okay, thank you so much. Appreciate it.
Here, if I may.
Yes, please, Dan.
So this strikes me as, I mean, making rules for ourselves, that we can arbitrarily change in the future when Sabrina and staff are already doing a good job. I don't know that we should make rules if it's just not necessary. If we've already been operating at this for years, well above that amount, I'm not sure what the point is of setting criteria, because it seems like the policy of this council and previous councils and hopefully future councils has been that we're going to take a very conservative approach with our funds and our resources. This just seems like it's unnecessary because we're already doing it. We're already self-policing. So like, I don't think this would change anything. So I would say let's just, if it ain't broke, don't fix it. Let's just leave it the way it is.
The only thing that I would add is that, our current policy says that it should be between 25 and 40%, and we haven't been following that since 2014. So if we're looking at establishing a policy that we're actually going to comply with, we may want to change the wording to not going less than 45%. Then our current rate is not going to be in violation of what we're saying our policy should be. That would be the only reason, I guess, why changing the language would maybe make some sense. Because why establish a policy if we're not going to follow it? So just
Okay.
food for thought.
So counter to that could be, we'd maintain a fund balance between 25 and 90%. I mean, would that be another solution?
I'd be fine with that.
Whoops.
We'd be adhering to policy, but we still have more flexibility should we need it. But I guess that's my thoughts. I don't feel real strongly about this. I just,
Correct. And I mean, this policy is stating like just during the budget process, like when we're doing the budget, that we should maintain that. And we have maintained that. We've been above it. But Rick is right. The wording is, when we say it's going to be between these amounts, it's a little off. I can see where it can be confusing. So I'm good either way as well.
What are you looking for us? Just to have a consensus or just a thought process that will go to council next week?
Yeah, I mean, we could definitely do that and bring it to the whole group. If you feel strongly like we should change it, then I think we would make a motion and we would change it. But if you do not, then, I mean, I don't even have to put it on the council agenda if there is no need for any more discussion. It,
Kind of looking at Larry and Diane too. What are your,
I'm fine with kicking it to next week unless nobody cares, then we,
okay, yep, they're shaking their heads, yes. Mike, you're,
I'm fine with moving it to next week.
Okay.
I'm fine with, honestly, with going to minimum 45. It sounds like we're already there all the time anyways, but if we want to have a bigger, broader group discussion, it makes total sense to me as well.
okay. Yeah, let's do that. Bring
okay,
it to council next week then.
perfect.
Cool.
You don't need a motion then for that, right? Thank you.
All right, thank you, thank you, thank you. Item number, where are we?
6.
6, there we go, 2024 general fund financials.
All right, so next in your packet, starting on page 15 is the general fund financials. If I can draw your attention to page 20. This shows us our year-to-date revenues through May 31st of 2024. We have had total fiscal activity of $8,733,463. We have 24.79% remaining to hit our budgeted revenues. As of May 31st of 2023, we were at 18.76%, still pretty much on par with 2023. There are a few state payments that will still be coming through. If I can draw your attention to it's page 18. The shared revenue from the state, which is account 100-00000-43309. The shared revenue from the state that will be coming through, and that's $995,000. So that's another big item, as well as our state aid road allotment that comes in quarterly payments. That's 100-0000-43530. So some of those items still waiting for them to come through the state. Also our building permit revenue. There are lots of checks coming in last week, so things are looking good for the end of June and into July as well.
Awesome.
Then if I can draw your attention, if we talk about expenses, which is on page 32, our total expenses year to date is $4,543,756. The total percent remaining is 60.87. As of May 31st of 2023, we had 63.97% remaining. We're slightly lower than we're trending slightly lower than 2023. And that's because May had a 3 pay period month, while 2023 only 2 pay periods in May. So then the third one caught up in June. So right where I would expect us to be, no concerns at this time.
Thank you. Questions, Dan? Mike?
I'm good.
Diane, Larry, anything? Good. All right. What's the pleasure of the board?
I'll move to approve and place on file the 2024 general fund financials.
I shall second that.
Motion by Mike, second by Dan to approve and place on file the 2024 general fund financials as outlined by Sabrina. Any further discussion? All in favor?
Aye.
Any opposed? Motion carried. Item number 7, Omni Center financials.
All right, next in your packet on page 33 is the Omni Center financials. I can draw your attention to page 36. This will bring us to our budgeted revenues. As of May 31st of 2024, we have 47.85% remaining to hit our budget revenues for 2024. As of May 31st of 2023, we were at 41.26%. So pretty close to where we were at last year. Then if I can draw your attention to page 38 to get our total budgeted expenditures. As of May 31st of 2024, we have 52.91% remaining. As of May 31st of 2023, we were at 49.77. So we're trending a little better than 2023 in regards to expenses, in regards to budget.
Thank you. Questions, Dan? Mike?
Nope.
All good.
All right, I'll move to approve the 2024 Omni Center financials and place on file.
I'll second.
Motion by Mike, second by Dan to approve and place on file the 2024 Omni Center financials as presented by Sabrina. Any further discussion? All in favor?
Aye.
I,
Any opposed? Aye. Any opposed? Motion carried. Thank you. Thank you, Sabrina. And item number 7, or I'm sorry, 8. What am I on? Amy.
Good evening. As you can see, we are fully staffed for our regular positions. So we did not have any hires in the month of June. I know that I say that we are fully staffed, but again, we've got in our police department particularly, we've got 4 officers in the law enforcement academy. We've got 2 that just graduated that are in field training. So again, that department is still, working towards being fully operational in that regard. This was also a good time to look at our mid-year hiring status. So overall, we've filled 15 regular positions since the beginning of the year, 88 seasonal positions. And so we are making way to start our next half of the year and see what that brings us.
Awesome. Thank you. Any questions? All right.
it's nice. I just want to point out that how nice it is with Amy in charge of HR. I mean, staffing really has not been an issue. So, top notch, good job. I remember the days when that list was like very long, and you've done a good job keeping that clean and short.
Thank you. Thank you. Thank you. All right. That takes care of it. No further business.
I move that we adjourn.
Second.
Motion by Dan, second by Mike to adjourn at 6:47. All in favor?
Aye.
Any opposed? Motion carried. Thank you, everyone.